Well, it's going better, actually. Now, from a 0.25% higher in the pre-market, it's now 0.33% higher for the Nifty itself. 30 up, 31 up, 10,923, exactly in resistance zone. Sensex up 120, and that's 36,450. Bank Nifty is up 0.25%, 73 up, that's 27,550 thereabouts. What's doing well? Indiabulls Housing. You know, they can go and raise foreign money more easily now. So maybe that's helping, but for whatever reason, there's Axis Bank also to give it company HDFC. HDFC also will be a beneficiary of the easier rules, though they recently raised money. Bajaj Finance also is up about 0.5%. So good day for housing finance and NBFC companies, at least those that are in the Nifty. JSW Steel is the other one that's doing well on the Nifty. That's up 1%. Z Entertainment, they referred to it again, up 1%. HDFC, I told you. Bharti Infratel, the Bharti twins are both up about 0.6. Vedanta is up. So metals actually having a reasonable day. We should get Manisha more often. Let's look at what's not doing well. Well, actually, the tech stocks are not doing well again. HCL Tech, Infosys are sulking a bit. Well, I guess some profit taking would be there in Infosys. Bajaj Auto, BPCL, Hindalco are the other ones that are not doing too well. But it's a very short red list, reasonably good for the market, 10,928.
Okay, well, it's a decent opening for the mid-cap index, up about 0.3%. The market breadth is positive at 3:1 in favor of the advances. The stock of the moment on the downside is Motilal Oswal. It's down about 5.5% on the back of those weak numbers. The volumes are also piling up over there, so don't lose sight of that. Apart from that, Jet Airways is also under pressure, so about a 1% knockdown is what you're seeing. Now it's getting worse, 2.5% gone, and big volumes on Jet Airways. The entire mid-cap IT space is under pressure. Mindtree is down, post its numbers, 0.2%. KPIT Technologies is under pressure, down about 1.5%. So the street is definitely a bit concerned over there. Infosys from the heavyweights is coming in for some profit taking. Couple of stocks like AU Small Finance Bank ahead of their numbers is gaining a bit of ground. Specialty Restaurants another day running, reacting to very good numbers, so 12% higher there. And a couple of names, you know, these graphite-related stocks had a very good session yesterday. So Graphite India is seeing some follow-on buying. This week, it's been almost a 7% gain for Graphite India. So keep an eye out on that. DCB Bank, Federal Bank are other names which are trading in the green right now. And from the frontliners, it's Reliance that's holding up ahead of its numbers later today. Now the market is picking up some pace. So it looks like we're taking another shot to kind of conquer that hurdle of 10,950. Whether we manage to do it or not, only time will tell. But at least that attempt is being made.
Yeah, the attempt is being made. But let's see. I mean, once again, you want to preempt that, or you want to just stay put and see how things move. I think for me, the stock of the moment, of the opening trade at least, is Bharti Infratel. Because, you know, it's corrected a bit over the last few days. One of the top gainers, of course. Just the opening tick is quite interesting. The way that the first tick has panned out on Bharti Infratel after a decent correction in a stock which has done well. I think that is looking quite interesting to me. Let's see if there's any follow-through in that. Because if that is the case, then perhaps this really could be one of your top stocks to watch out for the day. So that one really stands out for me. NIT Tech is actually losing a bit after good opening. Mindtree is seeing quite a bit of decline. Let's see how that one shapes out. But, you know, the Bharti stocks look quite interesting to me. Ashwini, your thoughts on market opening, and is there a trade for you?
See, what I have done is I have bought 10,900 puts, because this 20-point gap up will not help anybody. And chances are, you know, once the bears smell blood, you will get into trouble with this. So let's see. Generally, gap ups, unless they are of a certain size, they tend to fail on you, and you know, you can get back into a collapse which could go as far down as 10,750, 770. That is the zone I want to buy. 11,000 is a place where I want to sell, because this is not a breakout market. And unless you have clear triggers, you will start failing at higher levels.
Okay. Sudarshan, what would your trades be now?
Well, I'm long, and so that's the trade. I continue to be long, and traders who don't have a position, I think Yesterday's narrow range is breaking on the upside. Now it's anybody's guess what the results will do, how we will anticipate it. But I would be a buyer at current levels if you don't have a position in both the indices, Nifty and Nifty Bank.
Okay. I wanted some thoughts on Axis Bank as well. That stock is now getting closer to its 52-week high. And in fact, it's once again gaining ground, up about 0.5%. Mitesh, would you trade this on the long side? And anything else that you've noticed in market opening?
Yeah, I think I would very clearly. Axis and ICICI, the long-term charts are very positive, and in the short term, I think this will be a fresh breakout for Axis Bank. So I think in that sense, once we start getting past the 670-75 zone, I think the stock should head towards 715, 720 level. So I would be quite positive. Start accumulating slowly, keep a stop at 658. And once it starts getting past 675, maybe add on to your position, trail your stop to about 669 and hold for targets of around 715, 720.
Okay,
that about nothing much. I think I do like Infratel though. I think it's bouncing back after 4 days of correction from support level. So that could be a trade with a stop below 275. But look for modest targets of around 288, 290.
Yeah, Bharti Infratel is doing well. But apart from that, Mindtree is falling more. So 828 on that stock now. Hexaware is also down along with it. For last 2 days, Indiabulls Housing is seeing some buying. So 2.5% higher on that stock. Lata referred to it, of course. Not just Indiabulls Housing, but Shriram Transport. In fact, the top 4 F&O gainers.
These are green today.
Yeah, or all
Indiabulls,
NBFCs,
Shriram,
L&T
Repco,
Finance,
Canfin, DHFL, GIC Housing, LIC Housing, and the entire.
Chola Mandalam, LIC, and Piramal Enterprises, almost everything looking good. Ashwani, any thoughts on any of the NBFCs?
See, again, with the caveat that we are hitting resistance, I think Indiabulls Housing is the one where the fresh trend is starting out. But overall, I won't chase any of the NBFCs right now, other than Indiabulls, which I can hold for a few days. But housing finance is the stronger out of the rest of the NBFCs.
All right, gentlemen, thanks a lot for taking us through the market opening. Well, it's a decent start, once again running into the resistance. Indiabulls Housing and Bharti Infratel are really your top gainer, at least at this point in time. Let's see if there's any follow-through in them. Saurabh Mukherjee, founder of Merciless Investment Managers, is with us now. Saurabh, hi, good morning. Your thoughts? The market's negotiated a lot of bad news, still around the 11,000 mark, but struggling to take this out. How's the risk-reward stacked up right now?
I think, as I've been saying for the last year and a half, it's still an overvalued market in our country. In totality, I think the Nifty is still overvalued. I would stick to the point I've been making on your channel for several months now, that somewhere around 9,500 is where fair value for the Nifty lies, given the bleak earnings outlook for the current fiscal. As is evident from a slew of macro data, 1Q of the current fiscal was the height of the sort of economic recovery. And since then, the economy has been slowing down. The slowdown is not a sort of rapid, we're not falling off the cliff, but as industrial production data, auto sales, the CPI data suggests, the economy has lost steam in the last 4 or 5 months after hitting a sort of nice, punchy growth number in 1Q. So it's a slowing economy, suggests that the RBI should push through a rate cut, perhaps a 50 bips rate cut in February. But my reckoning is until the elections are done, we will be in a sluggish economy. Weak earnings growth this year is a pretty well-known fact. So I would buy the market wholeheartedly if we hit 9,500. But until then, it's selective buying of the sorts of stocks I've liked historically, consistent compounders, well-run companies. But I don't see value in the overall market at the moment.
Okay. Good morning, Saurabh. That's not the view shared by a large number of consumer companies. The people I have spoken to, at least a couple of them, it's just anecdotal. They say that don't, extrapolate what the car and the two-wheelers have suffered in the December sales to all consumer goods. They probably were victims of, insurance and the debt market problems. But I spoke to paint guys, and we did play out what KBS Anand and Abhijit Banerjee had to say, the Berger Paint guys and the Asian Paint guys. They all seemed very confident that they had a great festive season and they were looking forward to a fairly decent fourth quarter. So is there some segment of consumption that you like?
So I think the trend which is clearly visible, and I think you're right to highlight it, is anything where financing is involved, so bikes, cars, even I think the big ticket electrical items, anything where financing is involved is hit a rough patch, not just because of the post ILFS and BFC funding squeeze, but more generally I think short-term money has got tighter in our country. The 3-month CP rate, whilst it's come off a bit in the last month or so, the 3-month CP rate has steadily trended up for the last 12 months. So as money gets tighter, naturally consumption which is funded by borrowing from NBFCs has run into rough waters. And on the other hand, small ticket consumption, FMCG, paints, where there is no need to borrow to buy that item, I think continues to be robust. I think the government's done a decent job in the last year or so of trying to infuse money into rural India. Obviously that attempt will continue to the elections. So small ticket consumption is holding up nicely, I completely agree, which is why I said the consistent compounders of the sorts of Asian Paints, Berger Paints, I would even go as far as to say a Pidilite, a Marico, these sorts of companies are I think well placed to deal with the next 6 to 12 months in our country. But consumption where you are borrowing money I think is a different matter. I think cost of money will rise steadily in our country even if the RBI cuts rates in February, and therefore for anything which is any consumption which is funded by borrowing, I think we're in troubled territory for the next 12 to 24 months.
Okay. Well, the market has some stocks that are now starting to collapse. Jet Airways is one of them. It's down almost about 4% Big volumes on Jet Airways on the downside. Mindtree and Yes Bank are the other two stocks that are really falling hard now, about 2% apiece on these two names. Of course, all the stocks are in the news for different reasons. Saurabh, hi, good morning. In the run-up to the budget, will the market price in the possibility of the government breaching the 3.3% fiscal deficit target, or do you think that's not much of a concern in an election year?
I think by and large, if you look at the bond market and if you look at the jump in the 10-year bond yield again in the last 2 to 3 weeks, I think by and large the market sort of said it's pretty much close to impossible now for the government to get to 3.3, even if they pull some money, or even if they get $3 billion from the RBI as an interim dividend. I think it's looking 3.3 is looking out of reach, and you might have sort of seen the CAG's recent report on I think a scathing report on the quality of accounting done by the Exchequer. So joining the dots here, I think the bond market is broadly saying that we are in a tricky fiscal position, and my reckoning is that point of view on the budget deficit will prevail until we hit the July budget, where I think regardless of who's in power, in the July budget we will have to do a fiscal belt tightening given the challenged state of India's finances at the moment.
So you would, as a market person, should people work with something big that could be announced either on Feb 1st or before?
My reckoning is that the big announcement, so to speak, in the budget will be about flagging to the country as a whole that, look, if you vote for us, if you elect us, these are the things we can do for you on the other side. So, if you put me in the Exchequer shoes, I'll try to indicate some sort of universal basic income. Maybe not universal in the sense applying to everybody, but certainly to people below the poverty line. I think it's an idea that Arvind Subramaniam had mooted, and it's an idea whose time has arrived. And for the middle classes and for the corporate constituencies, then you focus on the direct tax code. You try to signal to the corporate world that I will try to take your tax rates lower, corporate tax rates lower, and you try to signal to the middle classes that the minimum slabs of income tax could move upwards. So there will be, I'm sure, a fair bit of signalling, and why not in the vote of account? There will be a fair bit of signalling. There will probably be something for everybody in terms of signalling on the other side of the election. But in terms of tangible announcements which will affect the economy in the near term, I think that might be pretty hard to pull off, given that it is a vote.
Buy or sell stocks on the basis of what you're expecting in the budget?
I wouldn't really take the budget as a driver of stock prices at the moment. I think we are in territory where, as I said, the overall market is overvalued, cost of money is rising in our country, the political outlook is uncertain, and hence my reckoning would be, don't get too carried away by whatever is said in the budget, one way or the other, both from a despondency perspective and from an enthusiasm perspective. Buy high quality compounders of the sorts we've just mentioned. If you want to play a macro bet, if you want to play the macro cycle, focus on the currency being weak, staying weak, and look at IT and pharma as a way to benefit from the weak currency. But I wouldn't urge, getting too carried away by the macro picture, RBI rate cuts, the FM's speech on 1st February. I would keep it very stock specific at this juncture.
That's interesting, because that is what I wanted to ask you. And since you spoke about IT, where are you right now on this Infosys versus TCS argument? Because over the last 1 month, Infosys has trimmed some of the discount compared to TCS. Still, of course, trading at a large discount. But you reckon, going by the last 2 quarter evidence, there's some more trimming that could be possible?
So look, I think if we address the totality of the IT piece, I think it was a year and a half ago when I turned bullish on the sector. My bullishness remains. I think it's only in this quarter that we are starting to see the benefits of the weak rupee flowing through. And if the rupee stays between 70 to 75, which I think it will in all likelihood, I think IT will continue to have a bumper run. Now within IT, I would still stick to my point of view that TCS is my favorite play in IT. I think it's the best run of the big Indian IT shops. It's got the best credentials in outsourcing, and I know whilst Infosys' results have been better than TCS's in this quarter at least. I would stick to TCS as my main frontline bet on IT. I think equally interesting, I think, is pharma. Pharma hasn't had a recovery in the last 2-3 years. The sector is still not shining, but both from a valuation perspective and from a fundamentals perspective, I think Indian pharma is long overdue recovery, and a stock like Dr. Reddy's is something I like in terms of playing a pharma recovery in our country.
Okay, so Dr. Reddy's is the stock that you like. Saurabh, what about the banking space? You know, there is a lot of negative news in the sense we hear that the Samadhan scheme has not been very encouraging. There's some worries about the loans to Mudra, the exposure that, banks have to MSMEs. That could perhaps be another blow up. How would you stitch all this together? Would you, continue to buy private sector banks, or, would you look to sort of increase exposure in PSUs?
I think there's 2 ways to look at it. One is, as I said a few minutes ago, I think cost of capital is rising in our country. It's evident from looking at the charts on wholesale market money that money is getting dearer. And therefore, banks who have strong CASA franchises, and HDFC Bank obviously springs to mind straight away, banks who have strong CASA franchises will pull market share away, not just from NBFCs, but from other banks who don't have such a strong CASA franchise. So that's one dynamic which I think is clearly established. Money getting dearer, and a strong CASA franchise bank helps you play that. The other element is, as we go into a climate where the PSU banks, who have been starved of Tier 1, I think stay starved of Tier 1 and are pushed towards funding Mudra, funding farm loans and so on. I think the PSU banks' wherewithal to finance both corporate credit and retail credit, I think, will be even more jammed. So investing in PSU banks is something I haven't sort of considered in my 10 years in India, and I would sort of safely park that decision away for another day. But investing in private sector banks with strong CASA franchises, I think that's something that's worked in the past in India, and I think will continue working in our country. So HDFC Bank is a straightforward play. I would also say have a look at Kotak Bank, and if you want to go down the market cap spectrum, then City Union Bank and DCB are well-run banks, albeit without the kind of powerhouse CASA that HDFC Bank has.
Okay. Let's move away from the banks. Saurabh, in the consumption space today, of course, the big boy, Hindustan Unilever, announces numbers. Reliance also will announce, and that's also to some extent a consumer play, because Jio and retail are going to be more watched than the traditional legacy petchem business. Are you a buyer in the consumption space? The argument would be it is overvalued and something like DMart can always happen.
Yes, so I think Lata, as we discussed, if you look at, say, someone like Zee's results, remember Zee's revenues will be heavily driven by advertising, and within advertising, as we all know, the bulk of advertising revenue in India comes from FMCG. So the fact that the FMCG companies are in good shape is also manifest from looking at at these results. So FMCG as a consumption play, I think firmly stays in my portfolio. Auto is a worrisome area for the reasons we discussed on the program. And then in between these two extremes, you have sort of items which are aspirational consumption, say apparel, where a company like Trent, I think, continues to be a well-run company, and something I think I would consider adding my portfolio at some stage this year. And you have, say, companies like PVR, which are another element of aspirational play. I think the aspirational plays, it's more selective. A Trent and a PVR are well-run plays on people having some amount of disposable income in their pocket, being a little optimistic about life and going forth and spending. So I would even dare say that beyond FMCG, if you do want to play consumption, play the aspirational element of consumption in our country. Look at companies like Trent and PVR, which are plays on more disposable income than, say, day-to-day necessities.
Those guys are playing specialty restaurants.
Okay, Saurabh, thanks for giving us your suggestions as well as talking about the markets. We'll leave it at that. You have a great day, and we'll touch base with you once again later.